Oh boy, here we go. We have a CPI release coming out today. We have CPI coming out in 2 minutes, and then PPI is coming out tomorrow. We're going to cover this. We're going to go into the details of what's going on. First, let's understand expectations so that way you can understand why the market is reacting the way it is after the data actually comes out. The current consensus estimates are that we're looking for about 0.21 on the month over month. And Nick T agrees with that as well. He has slightly different estimates on some of the others. That's Nick T from the Wall Street Journal, often considered the Fed whisperer. Core CPI is expected to be at 0.28 or potentially 0.3 from Nick's estimate. Year over year CPI is expected to be 2.54 versus and then 2.6 for Nick's estimate, and then the average core year over year 3.3 versus 3.3 for Nick. So match there. So we're gonna see what we get in just a moment here. It's gonna be pretty exciting. We're about 40 seconds away. Yesterday, the bond market sold off in anticipation of potentially hot CPI readings here. I personally am of the mindset that inflation is mostly dead. Obviously, there's noisy data in between all of the data that comes out. That's very understandable. The problem is, markets do move off this CPI stuff. So what are you gonna do? You can't say, oh, I don't want to, I don't care about it. It does matter. So here we go. We got about 10 seconds to go for the data to come out. And good luck, everybody. Let's hope we get a low read. We get some shelter disinflation, hopefully, and match across the board. Match. Maybe like if I actually look at the underlying numbers, like a teeny smidgy etch up, but otherwise it's a match across the board. Nothing scary here at all. This is actually a good thing because it means the forecasters are starting to get a little bit better with their reads. Usually in tough times when things are really confusing, that's when the data is very inaccurate. And the data gets more accurate, or the estimates get more accurate over time as they get, as everything basically chills out a little bit. But anyway, the stock market right now rising on this match right here. You can see a nice fat green candlestick here. You even got Tesla trying to rebound a little bit. Nice green candlestick there on Tesla. So nice boost there on risk assets. Let's go into the actual report. And let's find out what we got here. So, well, hold on a sec. Let's get the full detailed one. What's very important here is I like to get the full detailed table by category, because what we're going to be looking for is shelter disinflation. Hopefully that's continuing. Hopefully that continues to sort of drag this down. We'll see which sections are hot. Usually it's insurances that are hot. So I always have a habit of starting at the bottom because that's where we get sort of the services, the non-housing services. Here we go. And keep in mind the right side, just so you know, the right side is going to be your September to October changes. And then if you want the year over year changes, you're looking at the second column. Okay, so let's get all the way to the bottom here and let's get into it. So what do we got here? We got financial services up 0.4. I've got apparel services 0.3. Funeral expenses don't die up 0.7. Other personal services up 0.3. So overall 0.3 on personal services. It's a lower on the weight side anyway. What happened over here? Postage and delivery just skyrocketed. They've got some bizarre sort of ways they do postage and delivery adjustments here, but postage skyrocketed. Education and comm services in deflation, though, which is good, probably because of AI, honestly. Recreation services popped a little bit, probably back to school. Recreation services 0.7. Not a great jump right here. Don't like to see that. That's going to feed into some of that core and super core reading right here. So not great. That is specifically coming down to other rec services like club memberships and admissions to events. And that's really what that's coming down to, which is probably a good sign for the economy. What do we got here? Transportation services up 0.4 again. Definitely down from the 1.4 last time, but still warm here. Yeah, let's see where it's coming from. It's motor vehicle servicing. Yeah, getting parts for cars is just, and even planes is just a pain. Wow, motor vehicle insurance actually came down one, which is great. Now it's just parts. Interesting. And then airline fares. Wow, 3.2 on airfares. Wow, 3.2 there. Not so great. So definitely, car parts, airfares popping up a little bit. Hospital services also still a little warm, 0.5, not great. Medical care services, 0.4. Yeah, all right. Water trash collection, 0.5. All right, here we go. Owner's equivalent rents, 0.4, little step up from last time. We've been waiting for years to see shelter inflation actually turn into shelter disinflation. And it's trying to. I mean, we had a 0.5, then we had 0.2, we had 0.4. It's trying to come down, but this data lags so much. You still have owner's equivalent rents rising at an annualized rate here of 4.8%, which not great. Some of these components still a little on the expensive side. Don't love it. I really want to see some of these negative. That's when you're going to be in full on imagine when owner's equivalent rent goes negative, which I think will happen. Come back in 6 to 12 months. And I think owner's equivalent rent, we're going to be like, oh, wow, it's negative 0.1. Oh, it's negative 0.2, negative 0.2 again, negative 0.2 again. Because, there's so much supply coming online for multifamily housing, especially in, the southern United States and the eastern United States, less so in places like California. There's so much supply that's coming online. Rents really only have one direction to go, and that's down, or at the very least flat. So I'm surprised some of these owner equivalent rents are still up 0.4. At expectation CPI read, and you still have a hot owner's equivalent rent, medical care services at 0.4, and you've got airline fares up 3.2. That's a sign that most of these other things are probably in basically deflation. Education commodities down 1.1%, again, probably because of AI. Toys down 0.5%. Sporting goods down 0.5%. Pet and pet products. Boy, that was a sector that really lagged on inflation. It was skyrocketing for the longest time there. That one now down 0.4. Recreation commodities at 0. Medical care commodities goes negative again, 3 months in a row right here. You've got motor vehicle, what do we got here? Used cars. Wow, used cars up 2.7%. New trucks down 0.1, and then flat on new cars. But motor vehicle parts and equipment here, a 0.1. So what was the other motor vehicle part that we were looking at over here? Transportation services. It was the servicing. So it's not the parts. It was the servicing. Okay, well, I'm glad we clarified that. So it's the people going into the motor vehicle work. Look at that. Smartphones down 2.7%. And now you're just into deflation on some of your products over here, which is to be expected. Deflation on toys, deflation on phones, deflation on sporting goods, deflation on pet products. You do have TVs and audio equipment that got more expensive. Drugs actually came in at negative 0.2. Tires, negative 0.4. You have footwear accelerating 0.7. But if I go to the upper categories, apparel and total, down 1.5%. It's in the deflation category. Appliances, again, deflation. There's no pricing power left on stuff right now. It's so hard for people to sell stuff. Look at this. Household furnishings, flat. Floor coverings, negative. Window coverings, negative. Linens, negative. Furniture actually up 1%. And then, of course, we get into our energy, which was flat for the month. Then we get food away from home, only 0.2%, not a big deal. And then we get into, what else do we have here? Fresh fruits and vegetables. Fruits and vegetables up 0.4. Some of the other larger categories, meats are in deflation, 1.2% down. Food in general, only up 0.2. So, okay. As usual, some mixed information. Still lagging though on those owner's equivalents. I feel like I've been complaining about that lag for like a year now. It's crazy. Let's take a look at what some of the suits are saying and some of the other analysis that we're getting out there so we can consolidate that into this as well. I do want to quickly mention, if you haven't yet gotten your alpha report, you can scan the QR code or just go to meetkevin.com/alpha. It's a free report I send out every morning at about 6:15 a.m. 2 days ago, I talked about how I thought that GameStop was going to jump, and it jumped 10% that day. You could have gotten in basically flat, and boom, it's up 10%. Yesterday, I talked about how I thought Tesla was going to top on that day, and it was down 6.15% yesterday. Obviously, you're getting a little bit of a bounce back at the moment. But point is, if you want some free trading ideas, go check that out. That's different from the alerts that I send when I actually make moves in the Stocks Insight group, but it's a good free option if you want to see some of the insights that we're looking at. But anyway, car insurance index for motor vehicle insurance fell Yep, some of the suits are pointing that out, so that's good. So let's we'll quickly write down some of the notes here. So CPI results, all at expectations. Owner's equivalent rent still up 0.4%. So still lagging with housing disinflation. Airfares and motor vehicle services. Airfares, mail, and motor vehicle services up. Most products down, and many services down as well. Okay, including medical. Now, what about health insurance? Have we seen health? Let me see if we could quickly see insurance. So that's tenant insurance. Oh, tenant insurance was up. Health insurance, 0.5. It was motor vehicle insurance. Motor vehicle insurance went negative for like the first time ever, which was kind of cool. All right, so okay. Then let's see what some of the suits are saying. Okay, swaps are now pricing in a little bit more Fed easing. Okay, let's get the reaction on bonds. Bonds down 5.7% on the 10-year. So 10-year down, sorry, not percent, 5.7 basis points. Big difference there. Yields fall sharply on CPI data, which came in line of expectations. What are we pricing in for the next rate cut? Let's see here. Next rate cut is December 18th rate cut at 58.7%, slightly up after this report. Then we have odds of an exit. Yeah, okay, let's see here. Markets are demonstrating relief that the rise in prices wasn't bigger. Prices in October rose for shelter, used cars, trucks, airfares, medical care, recreation. Prices fell for apparel, communication, households, furnishings. Yep. And household furnishings. Okay. A little bit of a relief rally. Futures up a little bit after that. And that's it from those suits. Let me look at some of the other suits here. Nick T coming out. Nick T says 3-month annualized rate up to 3.6% versus 3.1% prior. Not ideal, but noisy, right? It's worth knowing your 3-month moves much more rapidly. So again, not ideal, but noisy on the 3-month. The 6-month held steady at 2.6%, and the 12-month held steady at 3.3%. So that shows you that smoothing out of the of sort of the monthly data there. And then we have, see if there's anything else in the last few minutes here from suits. Doesn't look like it. Honestly, this is a pretty benign report. And I personally, just as takeaways here, I expect this to continue. I expect we're going to get mostly as expected reports or benign reports for really the next year plus, unless we fall into a recession. Then we'll have straight up deflation. I do really look forward to when we get housing disinflation, or I should say deflation. When housing deflation hits rents, which makes up 34% of CPI and 25%, and it's coming, and 25% of PCE, these inflation rates will likely be well below 2%. And encourage the Fed to drop rates substantially to actually prop inflation back up. Think about this for a moment. We could calculate this if we want. Let's just do an example here. Let's take core and the core read that came in at 321,666. Core this month versus 320,767 last month. That's the actual, price index that they go with. Well, let's now look at housing, for example. And housing owners equivalent rents went up 0.4, and the weight is about 34%. And if I multiply that by what we had, let's see here, in today's 321,666, I get about a contribution of, hold on a sec, that's the increase. That's our weight. Oh, 0.04. There we go. I was just off by one. I get a contribution of about 4.37. So of this number, about 4.37 comes from this housing number. Well, if I cut that, let's just say in half, for example, just the housing number, and we go with a 0.02 increase. Well, now I'm going to take 2 points off of the CPI move on a month-over-month basis. And if I take 2 points off, we go from 321,666 minus 2, brings us to 319,666. That would actually be, oh, that's crazy, 319.66. That would then leave us with 0.4 deflation. So we would have a month-over-month read of negative 0.4 instead of, the 0.2 we're getting now, or the, the 0.3s that we're getting on these month-over-month numbers. It's kind of incredible to think about just the weight of one of those categories, and then the little fluctuations in the others. I don't think are going to really matter that much anymore, but we'll see. So quick check of the markets. We are rallying right now on Bitcoin. Look at that rally. This is just the 1 minute. In the last quite frankly, since CPI came out, and even the 5 minutes before, we've rallied about $1,500 here. Nice little recovery you're getting. We've got the Qs went from negative a quarter to positive a quarter. And on top of that, you ended up having Palantir now up about 3%. Nvidia's up. You got, bonds are obviously up after that, after this, more positive or at expectations CPI report. So some nice movements here. Obviously, none of that is going to save ticker symbol SAVE, which is down 58% on expected bankruptcy for Spirit Airlines. But that's really a topic for a different video. So there's your CPI breakdown. My take, not a surprise here. I kind of expect this to continue for a while. And then once we really start getting that rollover of housing, boy, we're going straight to negative. Anyway, we'll be back for the Stock Market Open live stream on the totally free channel over at meetkevin.com. Sorry, it's the Meet Kevin Market Live. I'll be live on that in about 30 minutes. I got to finish the alpha report now that CPI is out, and we'll be sending that alpha report within the next 30 minutes. If you want it, go subscribe right now. meetkevin.com/alpha report. I'm going to send it in about 29 minutes now. So if you sign up within the next 29 minutes, you'll get today's. Otherwise, you'll get tomorrow's, which will be including the PPI data. Anyway, thanks so much for being here, folks. We'll see you in the market live stream. Thanks so much again. Love you all. Make sure to subscribe. Goodbye.